Dear students, welcome back again. So till now we have done with the two videos which is related to cost accounting. So which is completely covering up the first lesson. So moving further, according to your syllabus from University of Mysore, so we have already covered the what is the meaning and definition of cost accounting, costing. So we have already discussed in the last video, that is about the advantages of cost accounting as well, correct? So today we are going to discuss about the limitations of cost accounting. So what are all the important limitations of cost accounting? Okay, so lack of uniformity is the first limitation, sir. So that is the first disadvantage, lack of uniformity. So cost accounting lacks a uniform procedure. It is possible that two equally competent cost accountants may arrive at different results from the same information. Keeping this limitation in view, all cost accounting results can be as mere estimates. So you have to understand, the same information we are providing to two different people to calculate, so their results will vary even though the information are same. Why? Because they don't follow a uniformity, a principle while calculating or while doing a cost accounting. So second important disadvantage, that is conceptual diversity. So what is this conceptual diversity? There are large number of conventions and flexible factors such as classification of cost into its elements, issue materials on an average or standards price, apportionment of overhead expenses, arbitrary allocation of joint stocks, divisions of overhead into fixed and various and variable costs, then division of cost into normal and abnormal, and controllable and non-controllable, and adoption of marginal and standard cost, due to which it becomes difficult to have exact cost in which a contact the reliable of cost accounting might be low. See, you have to understand, as I said, even cost accounting has some negative parts. So in that negative parts, see, issue of materials might be on standardized by their own organization or production unit, clear? So and prices also might be standard, and apportionment of overhead expenses, that depends on firm to firm or company to company or manufacturer unit to unit, department to department varies. And at the same time, if you look at that allocation of joint stocks, so if you consider that electricity bill, so that is for the entire production unit we consider, but as a joint cost, how we are going to apportion it, how we are going to divide it, clear? So these are all biggest challenges, and there are cost which is, we call it as a normal cost and abnormal cost at the time of production, and at the same time we have certain like a controllable and a non-controllable cost all as well. So those type of cost, and at the same time marginal cost, standard cost. So like to understand concepts which have a lot of diversity in it, so that also create a problem, and especially that directly influences on the reliability part of this concept, that is conceptual diversity will always leads to the reliability challenges in the cost accounting. So further, so point 3 we can discuss, that is costly, that is expensive. There are many formalities which are to be observed by a small and medium size concerned, due to which the establishment and the running costs are so much that it becomes difficult for their concerned to offered as cost. Thus it can be used only by big concerns. So see, why? Because it is expensive. See, there are many formalities, see, which we have to follow, which we have to observe. So to do this, the small and medium size concerns will have challenges. So due to which the establishment and running costs are so much that it becomes difficult for their concerns to offer us cost. So whatever we can say, cost of operation will increase due to this small in detail study. So thus it can be used only by big concerns. So it can be adoptable, it can be easily used by big concerns only. So next is ignorance of futuristicization. So whatever in future, they don't look into future, they always ignore the future situations. So the contribution of cost accounting for heading future situations has not been much. For example, it has not evolved so far any tool for heading inflation or situation. See, we cannot predict future with the help of cost, but present is, of course. Future also we can do with the cost accounting, that is nothing but estimation, quotation, so that all statements can be prepared. But like especially a few concepts, understanding about inflation, deflation, clear. So increase in the price level, decrease in the price level, that cannot be calculated with the help of cost. So that is what we call it as ignores the future situations. So next is point 5, lack of double entry system. See, under cost accounting, a double entry system is not at all adopted. So that does not enable to check the arithmetic's accuracy of the transaction and locate the errors. But in financial accounting, yes, of course, we deal each and every transaction with the double entry system. So where we can easily locate the errors, so where we can easily rectify the errors. So that is not possible in the cost accounting. That is just because they don't follow double entry system of bookkeeping. So next is developing stage. Cost accounting is to development stage, since its principles, concepts and conversions are not fully developed. So it is not completely developed, that concept of cost accounting. It is still in the beginning stage or still in the development stage. So these are all the limitations or disadvantages what I have listed. So that is cost accounting disadvantages or limitations. So next is very important concept, very important topic that majority of the time in your examination this questions has been asked. So what are the differences between cost accounting and financial accounting? So we can say that free question, we can say this question 90% there will be this question. So if you take it into percentage wise, so that is where you have to understand and you have to make a note of these differences. So I have come up with 15 differences, so which you can remember easily. Okay, so first I have made a list, that is basis, then I have a cost accounting, then I have a financial accounting. So let us understand point by point. See on what basis we can differentiate. Point number 1, purpose. So what is the purpose of cost accounting? Very simple: cost calculation, cost control, cost reduction. To calculate the cost, unit cost, to produce 1 unit of this product, how much it is going to cost. So cost control, where we can control, where we can have a control over a cost. And cost reduction, where all possible chances, where all we can reduce the cost of production. So this is the purpose, that is on the basis purpose of cost accounting. But financial accounting, which clearly speaks to find out the profit or loss, to know the financial position. So financial account is always prepared to know the profit or loss of the business and to know the financial position of the business. So point number 2 clearly says, that is coverage of transaction. So what is the coverage of transaction? How much it covers, how much it is wider. So cost accounting is only those transactions relating to cost of production, cost of sales, prime cost related thing we are going to understand. But in financial accounting, all the financial transaction of the business will be covered. So the area of coverage will be more in financial accounting, so which is a wider prospect. So this cost accounting is a smaller prospect. And thirdly, third point, periodicity of reporting. It gives, cost accounting gives you the information through cost reports to the management as and when required, whenever management wants, so easily that periodical report can be submitted by the cost accounting. But financial accounting, it reports financial operating results or financial position usually at the end of the year. So that is, we call financial year, that is 31st March. Every 31st March it submits the report. So next is cost control. So what is this cost control? It provides a detailed system of control for materials, labor and overhead cost with the help of standard costing or budgetary control. See, whenever we start a production, we'll have a standard. So we'll have a budget. So we will compare the actual with the budget. So we always compare the actual with the budget. So with this comparison activity, we can have a control over materials. So what is the quantity of materials to be used for the purpose of production, and what is the strength of labor required to achieve this targeted production, or overhead cost. So how to be controlled that overhead cost with the help of standard costing and budgetary control. But whereas there is no cost control at all under financial accounting system. So next, coming to the point number 5, form of accounts. So under cost accounting, we all know that it is, accounts are generally kept voluntarily to meet the requirements of the management. So this is only for the purpose of management, but now the Companies Act has made a compulsory to keep cost records in some of the manufacturing industry. It is compulsory, yes, but not for every manufacturing unit. Clear? Only for some listed units they have made it compulsory. So coming to the financial accounting, as we know that they are kept as required by the Companies Act of 1956, 2013 and Indian Income Tax of 1961. It is a compulsory to maintain financial accounting. So next, further moving into 6th point, which clearly speaks cost classification. So it makes clear distinction between controllable cost, uncontrollable cost. So then fixed cost, variable cost, then semi-variable cost. All these kinds of classification can be done easily in a cost accounting, but in a financial accounting we cannot do such kind of classification. Clear? We cannot do such kind of classification. So next, moving on to the point 7, valuation of selling price. So here the stock is valued at the cost prices only, so that you have to understand. So because cost accounting speaks about cost of the product. Clear? So their price, whatever you will get in a cost accounting, that is cost price only. But here in the financial accounting, stock is always valued at cost price or market price, whichever is lesser. So the lesser price will be considered. So while preparing financial accounting, whichever is lesser. So next is fixation of selling price. So it provides sufficient data for fixation of selling price of products. So at what price the product to be sold. So what should be the price of the product. All these things will be done by cost accounting. But in financial accounting, accounts are maintained with the objective of fixing the selling price. So here accounts are maintained with the objective of fixing the selling price. So that you have to understand under financial accounting. So next is point number 9, charts and graphs. So here charts, graphs, diagrams, statements are much used in this system for providing information to the management. So in cost accounting we can easily use like charts, we can use graphs, so diagrams. So you can give these statements as and when in whatever the method we wanted to. Clear? So that is another advantage of cost accounting. But whereas in financial accounting, so the presentation are not much used in this system. That is, we cannot use graphs, we cannot use charts, we cannot use diagrams very easily. So next is comparison, point number 10. So cost data is useful for inter-period and inter-firm comparison. You can compare between two different periods, or you can compare with the two different firms or company or production unit. So comparison can be done very easily. So but in financial accounting, inter-period and inter-firm comparison is not possible. It is possible, but not up to that extent, or accurately we cannot compare. Point number 11, figures. It deals partly with facts and figures and partly with estimates. So which cost accounting is not deals with 100% facts and figures, partly with fact and figures, and partly with the estimates, so that is quotation. But whereas in financial accounting, we mainly deal in financial accounting with actual facts and figures. So next point number 12, analysis of cost. Costs are analyzed by departments, by elements, by functions, by products, etc. So here we clearly identified, clearly defined analysis we do in a cost accounting. Clear? So each department, what is the cost involved? Each element, what is the cost involved? Each function, what is the cost involved? Each product, what is the cost involved? So we analyze in detail. But whereas in financial accounting, no such analysis cannot be done. We cannot do any analysis there as we do in a cost accounting. Analysis of profit. So shows profitability by products, by departments and services. So try to understand each department wise, each product wise, each section wise, or each service wise. It clearly gives you information about the profit earning capacity. But in financial accounting, it shows a general statement. It is just a general statement. Clear? Not by individual department, or not by individual product, or not by individual services. We don't get individually. Clear? But as a general, yes, we get to know whether we will be under profit or under loss. Next point, measurement of efficiency. So in cost accounting, yes, of course, we can measure each and every aspect in a efficiency matter. So you can easily measure cost control throughout the development of cost standard, which can be compared with the actual to take the necessary action. As I said, whenever we produce, we prepare a budget. So we prepare a standard costing, so we can compare always the actual with the standard, and we can easily compare. So but whereas in financial accounting, no system of measurement of efficiency. We cannot measure the efficiency there. So policy decision. Cost data is suitable for managerial decision. Easily management can take a decision whether to continue the production, whether to stop the production, whether to buy the products from current exist market, or whether to leave the production. So here we can take a decision, the management can take a decision. But here in financial accounting, data are not sufficient for managerial decision. Next point, 6, period. So whatever the period, that is duration, transactions are identified with cost unit. That is, there is no definite period. So now you are producing, we can calculate the cost now, at present. If you are doing after 1 month, yes. After 1 week, yes. Clear? So there is no definite period. So it goes along with the production. But whereas the financial accounting, transactions are recorded for the definite period. So that is April 1st to 31st March, which we call it as a financial accounting period. 17th point, transactions. It deals with the internal transactions. Obviously, we know cost accounting always deals with the internal factors such as material, labor, expenditure. Clear? So then raw materials, then the commission, salary, wages, all this will come. Then we will have different departmental expenditure, that is factory related expenditure, then office and administration related expenditure, then we will have selling and distribution expenditure. All these are interrelated, that is internal. Okay, so but whereas financial accounting deals with internal as well as external as well. Clear? So it is not only with the internal factors, financial accounting also deals with external factors. So next is 18th point, recording. It records the expenditures in an objective manner, that is the purpose of which cost is incurred. It is clearly well defined. So for what purpose we are incurring a cost. But here we will have a classification of records and analyze the expenditure in a subjective manner. So we can have a subjective manner of analysis. So what is that subjective matter of analysis? According to the nature of the expenditure, monetary information will be provided under financial accounting. So that is the nature of that particular transaction is always important under financial accounting. So further moving on to the point number 19, informal. It deals with monetary and non-monetary information. Cost accounting will cover up monetary as well as non-monetary transactions. Clear? So whereas financial accounting deals with only monetary information. Be clear? Financial accounting deals with monetary information only. So point number 20th, so relative efficiency. So here under cost accounting, it completely provides information or the relative efficiencies of land, labor and departments. Each related efficiency will be calculated. So that is under cost accounting, whereas under financial accounting, relative efficiency of work, their planning, departments cannot be easily judged. So these are the important differences between financial accounting and cost accounting, which is very, very important for your examinations. So as per your university syllabus, we have completed first lesson in cost accounting. So in the coming videos, so we are going to start a second lesson. So that is preparation of cost sheet and quotation. So along with the important terminologies which are we going to use in a cost sheet preparations. Okay. So until then, see you soon. Bye. Take care and stay safe. Stay home. Bye bye. See you.